So, in continuation to December 2024 suggested answers, so we are going to see the question 4A, question number 4A in management accounting. Srikar Limited provides you the following data for the year ended 31st March 2024. So, selling price per unit 200, raw material, direct labor per unit, so variable and fixed overhead cost 1 lakh. So, this is given in total. So all the other things are given per unit basis. So fixed and variable overhead alone is given in total basis. Okay. This is for the period 31st March 2024. So Srikar Limited sold 2000 units in 24-25. So in 25-26, so there will be a, I guess there should be a printing error. So this should be 31st March 2025. So what they have told, so this should be 2025. So Srikar Limited sold 2000 units in 24-25. Okay, they sold for 2000 units in last year. In 25-26, the selling price per unit will remain the same. Selling price the same. Direct base rate will increase by 20%. That means here 30 rupees is there. So now at present it will increase by 20%. So 30 into 120%, that will be around 36 rupees. So new price will be 36. This is same 200 as it is. This is for what 25-26 we are referring to. This is 24-25. Now we are referring to 25-26. So fixed cost will decrease by 6,000. So fixed cost will decrease by 6,000. So we need to bifurcate what is my variable overhead and what is my fixed cost. If 3,000 units are sold in 25-26, so here number of units is 2,000 units, right? Here it is 3,000 units. The total variable and fixed overhead will be 1,14,000. So if I am selling my 3,000 units, I will be getting a total of 1,14,000. So here, this is the very main point where the entire calculations plays a major role. So, okay, you are required to calculate what is the profit for unit. So, what is the profit per unit in 24-25? Okay, fine. Determine the units to be sold in 25-26 in order to earn same amount of profit per unit. So remember, same amount of profit which we earned in 24-25, that profit should be earned in 25-26 also. So we need to calculate the sales units accordingly. So first, I want to calculate what is my fixed and variable overhead. So here, 2024-25 and 2025-26. Okay. So my variable and fixed overhead is 1 lakh, and here it is mentioned as 1,14,000. Here we need to keep a point always. We can calculate with the usually that segregation of variable and fixed overheads will be based on the assumption that there is no change in fixed and variable cost. So here they have given 6,000 rupees decreased. So this is after decreasing that fixed overhead. So then I need to calculate what is the amount before decreasing. That means 1,14,000 plus 6,000. So this is before decrease. Fixed cost. Okay. So this 1,20,000, here there is no change. So 1 lakh itself will come. So this amount we need to use for our computation. Then only we will be getting the correct answer. So here units. Units is 2000 units and 3000 units. Fine. So what is my formula to calculate variable cost per unit? So variable cost per unit. This is based on, usually we will do segregation between variable and fixed. In case of semi-variable cost, we will segregate what is fixed cost and variable cost based on differential cost method. That is, variable cost per unit is equal to change in total cost divided by change in number of units. So here, how much there is a change? That is 1,20,000 minus 1 lakh. So change is 20,000. So 120 minus 1 lakh. So in units, it is 3,000 minus 2,000. So 1,000 is a difference, right? So 20,000 divided by 1,000. So 20 rupees. So my variable cost per unit is 20 rupees. Okay. So in 2024-25, I produced 2,000 units. So my variable overhead will be 2,000 units into 20 rupees per unit. So I will be getting 40,000 rupees as my variable cost. So my total cost, it is inclusive of fixed overhead, it is 1 lakh. So my fixed overhead will be 1 lakh minus 40,000. So my fixed overhead is 60,000. So variable and fixed overhead is 1 lakh. So here I am reducing this. That is 1 lakh minus 40,000. So 60,000 I will be getting. So this is my fixed overhead. Okay, fine. So now what will be for 25, 26? This we have calculated for 24, 25. This is for 2024, 25. Now what is for 25, 26? So how many units we produced? We are going to produce in 25, that is 3,000 units. So 3,000 into 20, that is 60,000. My fixed cost is reduced by 6,000. So now at present, 60 minus 6,000. So my new fixed cost will be 54,000. So my variable and fixed overhead will be 1,14,000. So this calculation I have did to cross verify and to calculate what is exactly my variable and fixed. So they have given the total 1,14,000. So in this calculation, you can cross verify whether the right amount is right or not. So this 1,14,000 we need to get. So hope the same type of problem, similar type of problem you received in previous question papers, you can refer that to. The same methodology is followed in that question itself. So then what else we need to calculate now? Now we need to calculate what is profit per unit. So statement showing profit per unit. So I am going to calculate for both the years anyways. So selling price. So for 24, 25, it is 200 rupees. So there is no change in this. So 200, 200. Then raw material. So raw material, it is 100. So they have not mentioned anything about the raw material. So it is assumed to be 100 for 25, 26 also. So direct labor. So direct labor, they have mentioned the increase. So 30 rupees is for 24, 25 and 20% is increased. So 30 into 1.2. That is after increasing 120 percentage you will be having. That is 36 rupees. Then variable overheads 20 rupees. Then I will be getting contribution per unit. That is sales minus all the variable cost. So 50 rupees and here it is 44 rupees. So my first question, what is the profit per unit for 24, 25? Okay, fine. Here I have calculated contribution till contribution I have calculated. So total contribution. So 15 to 2000 units, right? Here 44. Here I'm not going to calculate as of now. Okay, let me wait. So my total contribution is 15 to 2000 units, that is 1 lakh. My variable cost here is 60,000. Sorry, fixed cost. 60,000. So my profit 1 lakh minus 60,000. That means my profit is 40,000. Profit per unit. So that is 40,000 divided by 2,000 units. So 20 rupees per unit. So profit per unit in 2024-25 is 20 rupees per unit. So we have done for point one, calculate the profit per unit in 24-25. So we have completed this. Now, what is the question we have? Determine the units to be sold, that is number of units to be sold in order to earn same amount of profit per unit. So what is the formula for that? Number of units required to sold is equal to my fixed cost plus my profit divided by, so number of units in the sense I require contribution per unit. So always remember, whenever I require in units, I want to divide it by contribution. Whenever I want an amount, I want to divide it by PV ratio. So my fixed cost, that is 54,000. My profit, here my profit is per unit 20 rupees, right? So I don't know the number of units. So how many units I'm going to sell? That only I'm going to arrive. That 3,000 is based on assumption. So we are expecting 3,000 units. So anyways, I don't know the profit, total profit, because I don't know the number of units. So let us assume number of units to be sold is X. So my profit will be 20X. So divided by my contribution per unit is 44 rupees. So here what I'm assuming, number of units to be sold is X. So X is equal to 54,000 plus 20X divided by 44. So 44X is equal to 54,000 plus 20X. So again, this 20x, if I'm moving this side, I will be getting 24x is equal to 54,000. So my x is equal to 54,000 divided by 24. That means 2,250 units is required to be sold. I want to sell 2,250 units to get the same amount of profit per unit as like 24, 25. So here what have the number of units is assumed as X. So fixed cost is 54,000 and my profit here we are referring to total profit. So I don't know that total profit. I know only per unit. So 20 into number of units, that is X, divided by contribution per unit is 44. So this 44 I'm bringing into left hand side. So 44x is equal to 54,000 plus 20x. So my x will be 2,250 units. So hope you are clear with this question. So let's move on to next question. Akona Limited manufacture two types of mobile phones, XB and YB. Due to severe competition, it has to reduce the prices for next production period. So we need to reduce price for next period. So the following information is provided. Current period, selling price per unit 10,000 and 12,000. PV ratio 25%, 30%. Product specific fixed cost 10 lakhs and 15 lakhs. Next period, selling price 8,000 and 9,000. For the next period, the company wants the current PV ratio to be maintained and to achieve a break even for both the products or the 400 units. It is assumed that the number of units to be sold for XP and YB to break even, as well as the total number of units of XP and YB to sold during the year of sale. So this is the point we need to note. So you are required to analyze the cost reduction program to be envisaged. So how much I need to reduce the cost they are asking. Reduction in fixed expenses product wise. So here they have mentioned the company wants the current PV ratio uh, to be maintained and the break even for both the products will be 400 units. So here the revised selling price is 8,000 for XP, right? So my break-even formula, what is my break-even formula? So fixed cost divided by contribution. In case of units, my break-even formula is fixed cost divided by contribution per unit. This is my break-even point, right? So here, for both the products, it is 400, fine. The fixed cost, I don't know. So just it is assuming I am going to reduce the fixed cost, let us assume. So fixed cost divided by my contribution. So my revised selling price in this question is 8,000 and contribution is 25%. So 8,000 into 25%, that will be around 2,000. So my fixed cost will be 400 into 2,000. So it comes to 8 lakh rupees. But as of now, my product specific fixed cost is 10 lakhs. So I want to reduce my fixed cost by 2 lakh rupees. That is 10 lakhs minus 8 lakhs. So 2 lakh rupees, I want to reduce it. So this is in case of XP. So here itself, they have told reduction in fixed cost expenses product wise. So they have given 400 units and the break even and the number of units sold is same. So we can use this assumption. Then for YB, if I am coming to YB, I'm going to apply the same formula. So break even point is equal to fixed cost divided by contribution per unit. Here my contribution per unit is decided based on revised selling price. You want to remember this point. If you're using this existing, I will be getting the same fixed cost. So there will be no use of this. So here again I'm keeping fixed cost. So here contribution will be the revised selling price will be 9,000 into my contribution percentage is 30% into 30%. So my BEP is again 400 units here. 400 into 9,000 into 30 percentage, 2,700. So this will comes to 2,700 into 40. So 10 lakh, sorry, 400. So 10 lakh 80,000. So my fixed cost, revised fixed cost will be 10 lakh 80,000. So reduction will be my existing 15 lakhs minus 10.8. That means 4.2 lakhs I want to reduce. So this is a very simple question which you can calculate it in not more than 10 minutes. So and you can score your good marks in this question. Only thing is you need to analyze the concept and you have to match. So they have given break-even points in units. So you just try to apply break-even points in units. Based on the reverse selling price, then automatically all the things will come to your way.